Hey everyone, I'm Jeremy Szafron. This is Kitco News. Thanks for joining us today. Don't forget to hit that subscribe button for the latest. Now today on Chart This with Gary Wagner, we're exploring the impact of the U.S. dollar's strength on precious metals like gold and silver. And despite the broader market facing challenges from modest growth and persistent inflation, the star of today's show is Nvidia. It's a company that has transformed from a niche chip supplier to a dominant force in the tech industry. Fresh off a blockbuster earnings report, Nvidia continues to shatter expectations. In the first quarter alone, the revenue surged to $26 billion. Now, that's a triple increase, propelling them past industry giants like McDonald's and MasterCard. Now, with the stock price that has soared, adding $1.1 trillion in market cap or market capitalization this year, Nvidia's journey mirrors the early days of the internet boom. And of course, to analyze all of this, we welcome our buddy Gary Wagner, our resident technical analyst and the editor of thegoldforecast.com, to decode what these market movements mean to people like you and I. Gary, it's been too long. Welcome back.
It has, but it is great to be here, and it is an exciting day for multiple financial sectors.
Isn't that the truth? Okay, let's get straight to it. I want to start by talking a little bit about the U.S. dollar, Gary. It's showing significant strength, and I'm kind of curious, what the latest chart tells us about its movement. Can you highlight any key technical indicators that are currently in play here?
Well, absolutely. If we look at the dollar, and I have a daily candlestick chart, we can see that roughly in about the middle of April, it topped out at around 106. This, of course, is the dollar index. We saw it hit a double top, and from there, over a period of about a month till the middle of May, Thursday the 16th, it really hit a bottom at about 104, and it has gone up significantly over the last week, roughly from 104 to 105, which means that it has increased in terms of its value against the basket of currencies it trades against by a full percentage point. In a currency, that is a lot. The dollar has been on solid footing, moving to the upside for over a week in terms of trading.
Okay, well, as the Fed maintains a cautious stance on interest rates, let's talk a little bit more about those signals that at least traders should watch that might indicate a shift in the trajectory here. Is there an up? Is there a down? Where we go from here?
Well, of course, the most recent reaction that we saw in the precious metals and other markets was the release the other day of the FOMC meeting minutes from the last meeting. That, of course, came out prior to the most recent CPI data that followed. The information that the Federal Reserve had at the time of the meeting was that all through last year, we had a methodical and steady downtick in inflation, moving to their 2% trajectory. That kind of changed in January, February, and March when we got an accelerated or elevated reading. In other words, a slight uptick. And that's what the Federal Reserve was talking about, because the minutes, of course, is the discussion between Federal Reserve officials. It did not take into account the most recent inflation report that actually showed once again, another downtick. So I think that we had market participants being over optimistic prior to the release of the minutes, wishing that the first rate cut would first come in June, then September. Now it's in question as to whether or not there will be 3, more likely 2. Some are calling for 1. Yeah. But the key is that the market participants were reacting to minutes that came out before the latest report. The only caveat to that is that the Fed is on record saying that 1 month does not make a trend. They need to see meaningful data on a series of months. So what is important to watch is the upcoming readings of the PCE and the CPI, because that will really determine the forward trajectory of multiple asset classes.
Yeah, you mentioned it here, kind of in a waiting pattern, but we've seen some resilience on some of the precious metals side. But, talking about gold, Gary, when we talk about the U.S. dollar, that inverse relationship, pull up a gold chart because it's been so fascinating. We've seen these all-time highs as volatility Can you talk about when traders or when people were reacting? Does that reflect on the chart as well?
Yeah, well, if let's take a look before I switch over. The dollar has been up for the last 6 trading days.
Mhm.
And during that time, we had gold move higher with the dollar moving higher. And then, of course, over the last 3 days, it came down substantially. And so it's almost been as though the dollar hasn't played a significant role. And the
Mhm.
key is that all of the precious metals are paired against the dollar. There's 100% inverse or negative correlation between dollar strength and how the metals do. A strong dollar will take gold, silver, platinum, palladium, all of the precious metals lower based upon the fact that it's paired against it. But whereas we saw dollar strength while gold and silver were moving higher. We saw dollar strength as gold and silver moved lower. So the dollar has not been the most important factor, but rather buyers or sellers dominating the market.
Okay, so, given the dollar's strength, what would be a significant technical development or, a pattern, Gary, that could possibly make this a reversal or continued weakness in gold prices here?
Well, I believe that we're seeing an overreaction, a really strong knee jerk reaction, because we were down $33 yesterday and another 50 today. So that's an $80 decline due to directly attributable, I should say, to the release of the FOMC meeting minutes. Those minutes, as I talked about a second ago, came in prior to new information conveying the opposite or what the Fed actually wants to see. So, on a technical basis, real support comes in at around 2,300. That's these series of bottoms that came in May and then April here. But the fact of the matter is, we could see gold find tentative support roughly at 2320. That's the next target that I have. And we're currently at 2331. Of course, I'm looking at June futures. What we'll want to see is we've got good volume, but we also have a holiday weekend coming up. And so that will always add some volatility to the market. But I'm not convinced that we are witnessing a full-blown correction yet. It's certainly more than a one-off, because we've seen the second day and it's a very, very strong decline. But the other thing that's noteworthy is it's not a decline from gold in a mid-range, in a price point it's been to before. This decline is occurring immediately following a new all-time record high. So it gives shorter term and interim traders the ability to pull profits based on the recent move. And the recent move really was from about 2,300 up to 2,440 and above. And so $100 in terms of a decline over, let's say, the last 2 days in perspective is not that great. So I'm not convinced we're looking at a full-blown correction. But if it is a correction, this is how it would look at the beginning. So we need more data to determine, and we need to see what the fundamental reports that are upcoming over the next, say, 3 weeks as inflation reports come in again, and we get some signals from the Fed as to what they're going to do in regards to rate cuts, the magnitude, meaning the amount of cuts, and the timing of those cuts. They've pretty much taken a rate hike off the table. And that, of course, is very, very bullish. But rates are high now.
Yeah, they're high. And as you said, I mean, we started the year with 6 or 7 rate cuts. That was the narrative. At least that's what we were covering. Here we are, possibly one. Some people saying maybe none at all. I'm curious, is the volatility still affecting silver? Is it somewhat similar? Is there specific patterns emerging that differ from gold, or is it kind of a same approach here on the profit side?
Well, silver's been interesting because the percentage gains recently have been enormous. In other words, when gold was moving up 1%, 0.75%. Silver was moving up 3%. Here is a 4.5% move, just shy of 3%. It hit a high that has not been seen, and we really have to go far back, but it's not been seen really since February of 21, and this top here, which comes in May. So it's been a long time since we've seen silver hit this exaggerated high. And to go beyond that, we've really got to go back into August of 2020. So it's been a long wait for what I'll call silver stackers out there. They have been waiting for a move like this. And considering that silver moved from $26 to almost $33 in under 3 weeks is really significant, because we've seen gold make a series of record highs. We've not seen silver follow suit. This time, we've seen silver move along with gold with larger percentage gains, and the declines have been about on par with the percentage declines of gold. It's been exceedingly strong. And so the key is it did break above 30. It traded to a high of almost 33. The key to me is maintaining a price point above 30, specifically 29.50 is really important. But 30 is going to be a point in which some sellers could emerge a break below that.
Yeah, we had a lot of people come on and say 30 is so important. Just keep holding 30. When you look at that chart, is there anything that you can see about the future price direction here, Gary, in terms of a forecast for us?
Well, what I can see is when we look at major bottoms, nothing comes in till the beginning of this rally. We do have this resistance area that comes in at 29.5, which is why that's an important number to me based on these particular tops back in April. But we had such strong moves, and although they weren't true price gaps, because you do get this wick, the wick is the differential between this real body, which is the open and close. In green, it means it closed above the open. In red, it means it closed below the open. But the fact is that you had a price void in essence here, a very small one here. And so it really gapped higher in a very, very, not violent, but exceedingly strong manner. And it, to me, showed pent up buying demand emerging once we got real breakouts above 29, and it took it way past 30. Silver has been impressive.
Yeah, I mean, the metals have been so interesting just to watch, even over the past couple of weeks here, Gary. But what I'm hearing from you is maybe a little bit more smoke than fire, a little trigger happy on those buttons, perhaps.
Well, whenever you get a surge that takes up gold or silver, any of the metals dramatically higher, when it does hit a scenario in which market participants believe that it's overbought, it's going to come down as significantly as it went up. So a brilliant move up calls for a dramatic move down. You typically don't get a mild or tepid price drop or correction following a surge. And really, if you look at this, this is a real surge. I mean, you're looking at, in a period of under a week, going from 28 to 32.75. That's a huge move.
Yeah, absolutely. It sure is. We'll continue to keep an eye on that. You know, as I watch the markets today, everything quite red, everything under a little bit of pressure. But as we talked about in the introduction, Nvidia has been the darling. I mean, recently posting impressive earnings, driving significant movement to its stock price. I'm so curious from a technical analyst perspective, how do the earnings surge impact the chart here? And were you surprised?
Well, Nvidia has outperformed pretty much all of the other companies' equities out there. Considering that it surged by 10% today, doesn't surprise me in that the earning estimates prior to the announcement the other day were exceedingly high. They were a high benchmark to reach. And then when the report came out, they exceeded that benchmark. They are the only game in town For AI right now, they're developing a new platform called Blackwell, and that is significant. And they're keeping it in the same price range anticipated between 30 and 40,000. And this is not a single CPU chip, but rather a rack of chips that are all related. And it does have the promise to really transform and speed up the development in AI projects globally. And that is significant. There is no other company producing technology to the level that Nvidia is. And it's hard to see any company like AMD or Intel catching up with them because they are so far ahead of the curve. So the fact that it's up currently, it rose, I think, 10%, well, 9.32%. But if you look at this daily chart, you have this former top at around 958. It comes down and then hits this top just prior to the earning and gaps substantially higher. Now, the big news right now with Nvidia is they announced a 10-to-1 stock split, which makes sense now that it's over 1,000. I don't think that there's another chip maker that can touch them for AI development GPUs in the case of Nvidia for processing power.
Even the others in their peers in the markets today were a little bit red. With such a strong performance, there are technical signs that might suggest, I don't know, an overextension, or are we going to continue to see this growth here? At least some profit taking. We're just expecting the market to take a breath, but this one's resilient.
This is 100% fundamentally based.
Yeah.
As long as they have an edge, and that edge is significant, it's more than significant, because the other dominant players such as Intel, AMD, do not have any product that will substitute what this new Blackwell will, or their former AI chips, which is the cornerstone of all of these centers that are doing large language model learning things that require a tremendous amount of processing power. And there's no other company that is able to deliver the solution needed by these companies to move forward. And everybody is getting into the AI game, whether it's Google releasing Gemini, Microsoft releasing their new platform, all of, OpenAI, all of the former players like ChatGPT. There's Claude now. Tesla's coming out with it has been a real active player in AI. So all of the primary players are dependent upon Nvidia to continue to grow their models and to train their systems and to develop the products they are developing. And those products are transforming the workplace the way you and I and others around the world work, because we're implementing the earliest stages of these products now.
Yeah. It's almost like I said at the beginning there, it almost looks like we're at the beginning of the internet boom once again, only it's the AI boom. I'm curious, Gary, when you look at the markets, before I let you go here, and you look at the overall strength of what you're seeing today, as a trader, is there anything that's surprising you about the macro situation, just about the way that they're reacting in this environment?
Well, it takes me back to one of my earliest mentors when I first got in the industry, and this is back in 83 and 84, so it dates me, but I looked at charts and studied fundamentals. And the first thing I was taught about equities was that it's not a stock market, but a market of stocks. So it's not so much about these sectors, because sectors are going to run with certain demands, whether automotive sectors running hot or cold, but something like AI and the technology needed to move forward with it. The demand is huge, and there is only one pair of shoes that are currently is filling that demand. And the curve to become competitive, such as AMD or Intel coming up with a alternative, is so far removed from what they're able to produce now it seems as though the domination and dominance of Nvidia can only excel and can only get stronger. And so I would look for particular stocks rather than market sectors right now in terms of investing dollars in strength.
Yeah, well said and well put. Thanks, my friend. We're out of time already. That's Gary Wagner, of course, editor of thegoldforecast.com and our chief analyst, I would say, on the technical side. We appreciate you coming on all the way from Hawaii today, Gary, again.
Great to be here as always, and I look forward to doing this again and sharing our knowledge with our viewers.
Yeah, I appreciate it. Big thanks to your son for helping us out today, too. And for all of us here at Kitco News, I'm Jeremy Szafron. We thank you for tuning in. We got great content coming your way this week, so don't forget to hit that notify button, and we'll see you next time.